Breaking! America's great update for NIO stockholders. NIO's coming back to be the buzz of the town, and it's made America do something about it. Well, NIO is the most talked stock. We might consider it one of the reasons of China. So, what is the plan for America about this? We've got you covered, so welcome back to Stock Market News, you all. And without any more ado, let's dive into the video. But friends, do not forget your task, which is to please press that bell icon and subscribe to our channel. To talk about the whole matter, let's discuss a little bit of the history first. Even though electric vehicles represent the future of transportation, selecting the appropriate EV stocks can be challenging. One viable option for capitalizing on the expansion of the electric vehicle market is to make investments in the stocks of electric vehicle component suppliers. NIO, a Chinese manufacturer of premium electric vehicles, saw its stock fall by almost 5% over the past week, that's 5 trading days, outperforming the S&P 500, which remained roughly flat over the same period. NIO guided for lighter than expected deliveries for the current quarter due to the ongoing supply chain challenges facing the auto industry, and also due to the move by the company to retool its production lines for new models and to boost capacity. This decline comes as a result of NIO's guidance for lighter than expected deliveries for the current quarter. Although NIO delivered 3,667 vehicles in October, the company anticipates that it will deliver between 23,500 and 25,500 automobiles in the fourth quarter, which is nearly the same as the figures for the third quarter of 2021, which were 24,439. It is conceivable that the stock will drop even more shortly, or do gains appear to be the more likely scenario at this point? According to the findings of our machine learning investigation of movements in the stock price over the preceding 3 years, there is a 61% likelihood that NIO stock will increase during the next month. For further information, please refer to our breakdown of NIO's chance of rising. The longer-term prospects for purchasing NIO stock appear to be improving as well. NIO reported that it had seen record levels of bookings in October, indicating that demand for electric vehicles in China are still strong. The production difficulties that NIO is currently experiencing are likewise expected to be temporary. The company has suggested that it was trying to quadruple the capacity of its plant in Hefei, China, to 240,000 vehicles a year, with production possibly climbing to over 300,000 units with extra shifts. This was stated in the company's official announcement. The company's also growing its product line, and the ET7, the company's first car, is expected to make deliveries as soon as the first quarter of the following year. 2 further models are also in the works to be released in 2022. The economics of NIO's company is also showing signs of improvement. The company reported a smaller net loss for the third quarter than was anticipated, and its vehicle gross margins came in at 18% as opposed to 14.5% in the third quarter of 2020. NIO stock trades at a multiple of 7 times the company's estimated revenues for the year 2022, which is not an excessively expensive multiple taking into account the company's high growth rates and rising margins. Even though electric vehicles represent the future of transportation, selecting the appropriate EV stocks can be challenging. One viable option for capitalizing on the expansion of the electric vehicle market is to make investments in the stocks of electric vehicle component suppliers. The stock of NIO, a Chinese manufacturer of premium electric vehicles, has increased by almost 10% over the past month, around 21 trading days, exceeding the S&P 500, which increased by approximately 3% over the same time. Although the stock was subject to some degree of pressure in September as a result of the Evergrande debt issue in China and concerns about rising bond yields, it has recently recovered as a result of a combination of factors. First of all, NIO announced that it will increase the production capacity of its facility in Hefei, China to 240,000 vehicles per year, which is an increase from the previous capacity of 120,000 units. The expansion is expected to be finished within the first half of the year 2022. The corporation claims that the factory is capable of producing as many as 300,000 automobiles annually with the addition of additional operational shifts. This should make it possible for the company to satisfy the substantial demand for EVs that has been observed. Second, there have been some positive developments for NIO's electric vehicle competitor Tesla, which has generated solid profitability for the third quarter and landed an order for 100,000 vehicles from a major rental car company called Hertz. It would appear that this has improved people's attitudes throughout the EV industry. Is there an opportunity for growth in NIO stock? Well, according to the findings of our machine learning investigation of movements in the stock price over the preceding 3 years, there is a 60% likelihood that the NIO stock will go up within the next 30 days. So now, coming to the present, the Chinese premium electric vehicle manufacturer NIO stock, which is listed in the United States, had a mixed 2021, with its stock dropping by roughly 40% over the previous year. NIO's operating performance has been very excellent, with deliveries for 2021 increasing by 109% to 91,429 units. Nevertheless, the company was overshadowed by competitor XPeng, which expanded deliveries by 263% to 98,000 vehicles in the previous year. In addition, investors have been concerned about China's regulatory crackdown on technological companies, as well as increased attention to Chinese companies listed in the United States, and this appears to be another factor that is harming NIO stock. Having said that, several different aspects could assist NIO stock in outperforming its peers this year. To start, NIO's value appears to have a lot of potential. The stock's now trading at a multiple of predicted revenues for 2022 of less than 5, which places it far below comparable companies such as Tesla, which trades at over 15 times projected revenue, and XPeng, which trades at nearly 7 times. According to the estimations of most people, NIO will likely increase its revenues by a solid 75%. This is a touch lower than the growth rate of XPeng, but far more than that of Tesla, which indicates that the lower multiple isn't warranted. The longer-term projections also point to a positive outcome. It's anticipated that NIO will increase the number of models it offers this year, beginning with the debut of the ET7 full-size sedan, which will be followed by the launch of the ET5 compact sedan. Additionally, there's a possibility that additional new vehicles may be introduced this year. It's anticipated that NIO would make further progress with its international development. The company first expanded into Norway in 2018, and over the next 5 years it intends to launch operations in 4 additional European nations. It's also anticipated that NIO would treble its production capacity at its plant in Hefei, China, to 240,000 vehicles per year by the middle of 2022, and this might also assist in the growth of volume over the longer term. As economies of scale improve, NIO's margins are also anticipated to improve, making this a win-win situation. The stock of NIO, a Chinese manufacturer of premium electric vehicles that are listed on the New York Stock Exchange, has decreased by almost 7% over the past week, significantly underperforming the S&P 500, which has essentially maintained a steady amount over the same time. So what do you think's behind the current drop in price? The failure to make progress on the negotiations around the Build Back Better Act, which was a piece of legislation that incorporates purchase tax credits, harmed electric vehicle stocks in general. After ride-hailing company Didi Chuxing announced that it would delist from the New York Stock Exchange less than 6 months after going public due to regulatory pressures, the stock's also been weighed down separately by broader selling pressure in Chinese-American depository receipts for some time now. This has contributed to the stock's decline. Having said that, during the past week, there have also been a few encouraging new developments concerning NIO. At the NIO Day event that was held over the past weekend, the firm introduced a brand new mid-size luxury car that goes by the name of the ET5. It is anticipated that the automobile will become available for purchase sometime in 2022 with a base price of approximately $40,000. Additionally, NIO said it will begin shipping its new ET7 sedan beginning in March. Remember, this channel is just for information and doesn't advise anybody to invest in a particular stock. If you want to start investing, please do thorough research regarding the stock. And that's going to be it for today's video. We'll be back with more, but until then, please like this video and subscribe to our channel. Thanks for